TJ the Wheel Deal coming at you with another whiteboard. This is again on SOFI. So let's talk about the reality. We've got 5,000 short puts at 28 with the extrinsic value sitting at about 420,000. We've got 5,000 short calls at 36. Expiration date is on Friday with 160,000 of extrinsic value. So here's my famous artwork over here. So we've got the line on the bottom, that's 28 puts. The line on the top is the 36 calls. And right now it's currently pre-market at about 31 bucks. So this is the sweet spot right here. This is the sweet spot. But what are we dealing with? Earnings. They just announced the earnings. They were really, really good. Amazing beats across the board with a really nice guidance raise. But tomorrow we should have rate cuts. That's bullish for SOFI. But then what's potentially bearish? Potentially some profit taking. Yes, that says taking. That's how I roll, right? That's why I don't do these too often. My penmanship's horrible. And you can have the shorts and the longs and the shorts, right? They're all fighting each other. So this is the drama right here. This is the drama. As long, you know, this is where the game is played. So this is the sweet spot. As long as SOFI stays in this range right here for the next 4 days, we pick up all of that extrinsic value. So let's just say SOFI shoots up, I can roll the puts up. So if SOFI shoots up, I can roll this put up to capture more premium. This is considered the untested side. If SOFI gaps down, I can roll the call down. So SOFI goes from 36 to say 34, 33. This now becomes the untested side and I can roll it back down. So anytime you move these closer to the share price, whether you move the calls down or the puts up, you're taking on more risk. So you're qualified for more premiums. So if SOFI were to camp out at like 32 or 33, maybe even 34, the minute that I feel pressure, more so over here, because this is the unlimited risk to the upside, right? There's not really an unlimited risk to the downside. I think the floor is like 24, 25 bucks. So this one's a lot easier to deal with than this one. That makes sense. So in a perfect world, I would like for SOFI to go to about 33 bucks a share, maybe even 34, and then I could roll the 28s up to 29 or 30 and bring in another $150,000 in the next 4 days. That's the game. But if it gets out of control, so we already know what to do. SOFI shoots up, roll the puts up. SOFI gaps down, roll the calls down. If it gets out of control, I roll and close half of the position. I roll it 60 to 90 days out for massive credits, and I readjust my artwork. What would that look like? Probably 26 and 40, something like that, but with only like 2,000 contracts. And then I let things play out, and then I can always add more contracts. Anyway, picture perfect. It's a picture perfect situation, but I gotta log on when the market opens. I'm gonna have to log on and see what Tasty Trade thinks about it. Because it's one thing for TJ the Wheel Deal to feel really good about this situation, but at the end of the day, Tasty Trade, the brokerage, is large and in charge, right? Because they're gonna look at, this is 5,000 contracts at 28. That's a $14 million notional. And limited risk to the upside. But the good news about the strangle is if this one's causing you problems, this one's making you money. If this one's causing you problems, this one's making you money. Because these things are mutually exclusive. So if I cannot be trading at $36 and $28 at the same time, but it sure can be trading in the middle, and that's exactly what it's doing, and that's what I expect it to keep on doing until the end of the week. TJ the Wheel Deal signing off. As always, may your sky stay blue, stock screen. Peace out. God bless you guys.